Hello, I'm David Chaston with 98.9, brought to you by interest.co.nz. This week at Everything You Need to Know in 96 at 9 o'clock, with news of a lull in the trade war skirmishes. In Argentina, the Chinese and Americans agreed to a short 90-day truce in their trade war. The Americans agreed to not raise any more tariffs while further talks take place. Exactly what are the next steps is somewhat unclear, and both sides talk platitudes and past each other. But the G20 hasn't erupted into chaos, and that will be viewed as a success. Interestingly, the Americans talked of a tremendous success, but they have not made any formal statements of substance. No one really thinks this is enough to resolve their deep divisions, however. Wall Street will no doubt enter into a relief rally, buoyed by stocks exposed to trade. This will come on top of the rally triggered by an increasingly dovish Fed that began on Friday and saw the S&P 500 end the week up 3.3% and back in positive territory for the year. In Canada's final GDP growth data for the third quarter of 2018 came in lower than expected at 2.1% and down sharply from the 2.9% growth in the second quarter. Japan's housing starts unexpectedly rose in October, taking them to a 950,000 annual rate and a rare, if only still minor, year-on-year gain. And their industrial production rose 2.9% year-on-year, also higher than expected. In China, their official factory PMI survey came in showing this sector has stopped expanding. The index fell to 50 in November, and that's the lowest this index has been since mid-2016. Expect a rally on Shanghai markets when they open today, however, on the trade news. India's growth slowed to a 7.1% growth rate in the third quarter of 2018, a sharp drop from the 8.2% growth rate in the second quarter. In Australia, iron ore prices are down more than 5% in the past 2 weeks, and the outlook through 2019 isn't particularly bright. On Friday, the ASX 200 took a bath, down 1.6% on the day. That means it is down 6.5% for 2018 and down a remarkable 10.8% since the beginning of September. Investors are sceptical of Australia's prospects and particularly negative about how public policy is not being developed in their highly partisan environment. US Treasury 10-year yield is starting the week at 2.99% and a dip of 6 basis points for the week. It's lowest since September. More importantly, that 210 curve has slipped 4 basis points to be now under 20 basis points and its lowest since August, and continuing a worrying signal with a new downturn trend that started in October. Gold is down $4 at $1,222 an ounce. US oil prices are very weak again today and now at a new low level of just under $51 a barrel. The Brent benchmark is now just under $59.50 a barrel. These prices are a 20% drop in November, this commodity being very much in a bear market. The Kiwi dollar starting the week firmer at 68.8 US cents, which is a whole 1 cent up on this time last week, but back exactly where it was 2 weeks ago. On the cross rates, we're noticeably firmer at 94.2 Aussie cents and 60.9 euro cents. That puts the TWI at 73.4 and its highest since April. I'm David Chaston. That was 98.9, brought to you by interest.co.nz.